Assalamualaikum and a very good morning to everyone. My name is Fazrin Najah binti Roslan.
Hi, my name is Nurul Ain binti Nasri.
Hi, my name is Waida Nuraini binti Mahiran.
Hi, my name is Nur Aina Alisha binti Husaini.
Hi, my name is Damia Kaisara binti Helmi.
Hi, my name is Nurida Finashika binti Amal Fuad.
In today's fast-changing global economy, personal financial planning is more important than ever, especially for the younger generation. In this assignment, we will discuss 6 major issues such as retirement planning challenges, low life insurance awareness, poor debt management, limited tax relief, fintech disruption, and demographic factors affecting savings.
So now let's move on to the analysis of current issues. So I'll be presenting about retirement planning challenges. So the issue that arises is 50% of EPF members fully spend their funds within 5 years and 70% within 10 years. The causes that lead to these issues are, the first one is retirement savings awareness is low among Asian society, and the second one is 75% of Generation Y have at least one long-term debt such as car loan, education loan or mortgage loan. Now, I will explain the impacts and implications of retirement planning challenges. So the first impact is Malaysian people are over-reliant on the employees' provident fund EPF during retirement. So due to the rising cost of living and longer life expectancy, EPF savings are often not enough to maintain a comfortable lifestyle. The second one is increase in economic vulnerability. So most of people save in low-interest account which do not grow fast enough to match inflation and living costs. Next, for the implications, the first one is financial education and retirement readiness are not addressed properly in schools. So as a result, most students lack knowledge and awareness needed to start saving early, which leads to insufficient retirement savings. The second one is younger generation lacks confidence in online financial services. So lack of confidence in online platforms causes people to miss out on investing opportunities to boost their retirement savings, which further reducing retirement preparedness. So here are the recommendations. So for individuals, the first one is individuals are advised to have early participation in retirement planning, and the second one is individuals are encouraged to diversify their retirement funds through investment. And for financial planners, the first one is the financial planners can collaborate with schools to implement financial education at a young age, and the second one is further improvement have to be made to online financial services to gain trust from people to invest.
Next, I will present an issue related to the healthcare and insurance. One of the key issues in this study is the low rate of life insurance usage among Malaysians. Even though life insurance is important to protect individuals and family, during unexpected events, only about 50% of nations are covered. This number is still far from the Vision 2020 target of 75%. So, there are two main reasons why this issue is happening. First is there is a lack of trust in insurance agents and companies. Some agents give a false or unclear information just to reach their sales goal. This causes people to lose trust when they find out later that their insurance does not actually protect them the way they expected. And second, the culture also plays a role. In some communities, people avoid talking about debts or planning for the futures because they believe it's bring a bad luck. So they do not want to buy life insurance early, even though it could help them later. Regarding this issue, the impact of this issue is serious. If the main income earned in a family pass away or become permanently disabled, the whole family can face a big financial problems. They might struggle to pay for loans, daily expenses, and children education. Some families are even forced to sell their house or fall into debt. Also, without medical coverage, even a small hospital bills can cause stress or financial hardship. Next, for the implication in the long term, this issue affects the quality of the financial planning. Many people do not really understand how insurance works, so they depend completely on agents. This makes it easy for them to be misled and end up with the plans do not fit their needs. When this happens, they cannot make a claims easily and they lose trust in the whole system. To solve this, individual needs to be more responsible. They should do their own research, ask clear questions, and only deal with the agent who are honest and professional. It is better to show with non-insurance company like Etika or Prudential BSN Takful, which is offer many options and better protection. For recommendation for the planner, at the industry level, insurance company and organization like the Malaysian Insurance Association needs to give a better training for agents and make sure they follow the ethical rules. They should also run more awareness campaign, especially in school, university, and through social media. This will help young people understand the importance of life insurance early and increase the number of people using insurance in Malaysia.
Today, I will presenting the current issue of taxation and regulatory changes in Malaysia, focusing on the main issue, the mismatch between the self-tax relief value and Malaysia's current economic condition. To begin, the self-tax relief for individual taxpayer in Malaysia has remained at RM9,000 since 2010. Despite the rising cost of living over the past 50 years, this amount has not been updated. This creates a clear mismatch between the actual financial burden they face by the Malaysians and the relief that provided by the government. In fact, according to recent statistics, about 1.2 million taxpayers in Malaysia are not entitled for any tax relief. This could be due to their income level or simply because they are unaware of the availability of tax relief. Now, let's look at the cause of this issue. The first cause is no revision of self-tax relief. The amount of self-tax relief has not been updated, revised or adjusted of inflation since 2010. Over time, the value of RM9,000 has weakened due to rising costs of essential areas like food, housing, transportation, and healthcare. The second cause is economic pressure. Usually, people will need to prioritize their base requirements like food, shelter, and health. In this situation, people will tend to avoid their tax responsible due to inflation, increasing cost of living, price of goods, and have low income. Third, there is a negative public view of tax system. People purposely avoid tax and make false claims as tax system has been seen as unfair and not relevant to this current situation. Now, let's move on to the impacts of this issue. Firstly, a rise in tax evading, especially in B40 and M40 groups. They face increased financial stress because their tax burden does not match their income and living expenses. Secondly, the government has faced large financial loss due to this tax avoidance. This makes it difficult for the government to make support funds like education, healthcare, and infrastructure. Thirdly, this issue makes the community's trust and tax moral continue to decrease. As for implication, if this issue is left unaddressed, tax income will not be collected in a fair and effective way, leaving the country subject to a shortage of funds to support public service. And it also makes individual taxpayers more likely to be non-compliant, which put high risk for them. And lastly, it contributes to social imbalance because people who are aware about tax system end up paying more. So, what can we do? For individuals, the first step is awareness. They need to improve their tax literacy and understanding. Taxpayers need to educate themselves on their rights and ensure to making a full use of available relief and avoid from any illegal action. As for financial planners, this is an opportunity for them to guide consumers on how to legally reduce their tax burden and claim all entitled deduction. At the same time, they should advocate for tax policy reform that are fair, timely, and based on current economic indicators like inflation and median household income.
I would like to talk about technological disruption in the financial sector. In Malaysia, financial services are rapidly changing due to fintech innovation like AI, blockchain, and mobile wallet. These technologies are transforming the way we manage personal and retail financial planning by improving access, speed, efficiency, and pricing. The main causes of this disruption include the rise of emerging technologies such as robo-advisor and peer-to-peer lending system. Additionally, the explosive growth of fintech shows how consumers now demand financial services that are accessible anytime and anywhere. This shift is redefining the financial landscape, pushing us towards a more digital future. Let's now look at the impact and implication of technological disruption in the financial sector. On the impact positive side, fintech has brought greater accessibility and convenience and improved operational efficiency for financial institutions. However, there are also negative impacts such as cybersecurity threats, regulatory challenges, and growing digital divide. In terms of implication, this disruption pushed traditional financial services to innovate while also offering cost-saving benefits and enabling broader access to financial services. Yet, that the negative persists. Cybersecurity risks, regulatory gaps, and the danger of digital exclusion may be addressed to ensure inclusive and secure progress. To effectively respond to technological disruption, both individual and financial planners have key roles to play. For individual, it's crucial to improve digital and financial literacy. Choose trusted platform, maintain human oversight, and always stay alert and informed. On the other hand, financial planner must adapt by adopting hybrid advisory models that blend human advice with technology. They should also invest in advanced technology, promote ethical use of data, engage with regulators, and educate clients to both trust and ensure responsible use of fintech. Together, these steps help create a more secure and inclusive financial future.
This article highlights the issue of increasing debt among young married couples in Malaysia. Many of them do not plan their finance properly and are influenced by their peers who have already started families. They often intermarriage with existing debts like student loan, and to make it worse, they take on more debt for wedding expenses through credit card or personal loans. This makes their financial situation even more unstable after marriage. There are 4 causes occur from this issue. Firstly, many young couples tend to take debt lightly because they believe they can repay it later and early. Secondly, they want to hold grand and elegant weddings to impress others even if it's beyond their financial capacity. Third, they usually don't have saving for emergency fund and depend too much on their parents. Most of them also rely on job benefits like EPF and insurance instead of managing their own finance. Lastly, they lack long-term finance awareness and don't think of the consequences of taking on too much debt. Next is impact. For the first one is when the debt builds without the proper control, it leads to the serious problems like family conflicts and unhappiness. Agreements over money, financial insecurity, and even divorce can happen, especially when children come early into the marriage. Man as the main income earners, so he will face the huge pressure and this create instability at home. For the second impact is, this article also stated that most people under 35 are at risk of bankruptcy due to personal debts and rising living costs. Their salary often is not enough to cover the basic expenses. For the implications, this situation can lead to the divorce, especially when financial pressure becomes too heavy. Couples may struggle to maintain the peace in the relationship because they are always worried about the debt. So, it will affect their emotional connections and the daily communications. The second implication is pupils nowadays tend to feel comfortable for taking the debt. They don't think about the long-term consequences and feel it's normal to keep the borrowing. As a result, their savings shrink and they are financially unprepared when the new responsibility comes after the marriage. Next is recommendation for the individuals. Firstly is young couples should get the financial guidance from the Credit Counselling and Debt Management Agency (AKBK) to learn how to handle the debt wisely. The second one is they should also review their Central Credit Reference Information System report before marriage to understand each other's financial status, whether it's good or not. For the financial planners recommendations, they are encouraged to provide the premarital financial counselling. The second one is gamifications. Gamifications methods like financial app or interactive tools can also make financial learning easier and more attractive for young people.
So, we will talk about life cycle hypothesis that I just mentioned earlier. Life cycle hypothesis is developed by Modigliani and Bloomberg. People save more when younger and working. Also, saving decline as retirement approaches, and lastly, it aligns with observed Malaysian household trend. I will present about areas such as demographic shift. The issue of the article is a concerning pattern in Malaysia, where lower level of household saving are highly related to particular demographic factor. Those with less saving are more likely to be older, have only a middle level job in the private sector. So, the cases align with the life cycle hypothesis. Individuals organize their long-term saving and spending behavior to ensure a consistent standard of living. So, aging reduce income and increase spending. Lower education is limited financial literacy and job access. Private sector, unstable income and retirement insecurity. So, impact. The first one is aging reduces saving capacity. Their income becomes fixed or limited, thus reducing their ability to save. This supports the life cycle hypothesis, where individuals accumulate wealth in working years and draw it down during retirement. Second, middle-level education linked to lower saving. People with secondary education often lack access to high-paying jobs. They may also lack proper financial literacy, making it hard to save consistently. Next, we move on to implication. The first one is inadequate retirement readiness. Many Malaysians, especially in the private sector, haven't saved enough for retirement retirement. Second, rich-poor saving gap is growing. Those with higher income and education save more, leaving others behind. The third one is the need for better policies. In Malaysia, needs targeted financial programs to help more people save. Lastly, B14 household can't save much. It is because low income and rising costs make it hard for poor families to save money. Recommendation have two, which is for individuals and financial planners. So, for individuals, we should start saving early. Then, we need to improve financial knowledge. Also, need to build saving habit. So, for financial planners, suggest need to focus on middle educated people. Then, create specialized program, have private sector employees and make financial learning simple. So, the end of this presentation, the conclusion, this research shows that 6 main issues like retirement planning, healthcare costs, taxation, technology disruption, social and demographic shift, and debt management affect how Malaysians manage their money. Many people, especially in the B40 and M40 group, struggle because of rising living costs and lack of financial knowledge. To help, Malaysians need to start learning about money early and build good saving habit and get advice from financial experts. With better education and support from the government and financial institutions, everyone can make smarter financial choices and enjoy a more stable future.